Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So here on the short-term charts and daily chart in particular, the situation hasn't changed significantly. Mostly we have discussed already this in our recent videos. And we said that well, nominal bullish setup is still valid. It's just because actually we've got inside week during the performance of the last week, and it makes no impact on the technical picture on the weekly chart. But overall performance that we see here is not very attractive for taking the new position. First of all, you could see that market is calling near the lows around this area, around the invalidation point of the weekly grabber that we have discussed 2 weeks ago. Second, shape of this reverse head and shoulders is not attractive. It's just because the speed of the dropping here on the right arm is too fast and mostly equal to the performance on the left arm, on the head and the left arm. This is typical for the hand shoulders to the left, but on the right side, when the bulls intends to control the market, this is not good sign. So besides, if you take a look at other markets, for example on the dollar index, you could see that here we still have this bullish grabber on the weekly chart that has been formed earlier than on the euro currency. With this performance, definitely signs of the bullish dynamic pressure, market keep going higher, and all this background makes not very attractive the current situation on euro currency. In fact, nominally the bullish context is still valid, and you have theoretical reasons to consider taking long position. But by looking at it from the practical point of view, it seems that the only attractive moment here is the only advantage of this potential position is that you could place relatively tight stop. That's all. Because as the performance of the market here, as all other things that we have just discussed, well, significantly decrease the probability of success. So in fact, I would call it some kind of the moral gambling rather than some really reliable background, reliable trading plan. Of course, if this will work and market by some reasons will show the explosive upward action, reward will be really outstanding. So it will be great. But for now, this situation is not very attractive. By looking at the lower time frames, on the fall time frame chart, we have mostly the same picture. If downside breakout will fall, next destination point will be around 105 area. So we already talked about this. And the only thing that could save the bullish context and bullish setup stands on the hourly chart, and we talked about this on Friday. That's might be the double bottom. So to make the position of this double bottom, all you need to do is just place stop somewhere below this area. It's very small distance to the potential loss, and this is, as I said, only advantage of the current position. I do not see any other advantages here. So from that standpoint of view, if you are not ready to take significant risk of the loss, or you do not want to just get some really great profit with a very low probability, it would be better to sit on the hands and wait for clarity with the direction, particularly speaking, how the situation with the weekly grabber will be resolved. Downside breakouts, erasing of the grabber immediately will set the new direction, which will be down, and we could start our trading process once again. So we will start watching for attractive areas for taking the short position and gradually following the plan as we usually do. Another chance for trading is also only for those who are ready to take significant risk, might be in consideration of the using stop sell order for potential breakout to the downside. For instance, you could place stop sell around 10670 area, very close to these lows or to these lows, slightly above them. And if market will show the breakout, trying to move stocks to the break-even as possible, or just keep watching closely on what's going on. As you understand, the major risk here is potential wash and rinse. If market will just grab stops below this area and then returns at back up, this will be potential risk. But once again, the potential loss of this trade will be also very small. Both scenarios, as for taking long position with the hope that this double bottom will work, as using stop sell order for possible breakout, has really significant risk. But both has also significant reward if they will be successful. But this is only for those of you who are ready to take this risk. For others, as I said, let's just be patient, wait for clarity, how situation with the major pattern will be resolved, and then make the decision. So our fundamental look that we have considered in today's weekly report has some issues for possible year upside performance. But unfortunately, if this will happen only in July and September. First, if Fed will cut the rate in July, this will be the first point in our suggestion. Second, if European Central Bank will not cut the rate in September. Both scenarios currently have not bad chances to happen by our view, and we explain why we think so. But unfortunately, this will be already in the next month. Meantime, if you take a look at the monthly picture of the euro currency, you could see that it looks not as dangerous as you could see on the, for example, retail broker chart. So the bullish graph are still valid, and the current drop is not really too significant. So it still stands somewhere around this area, and market by now still holding the bullish context on the monthly chart. So we will see what will happen. That's shortly speaking what we have on the euro currency. Hopefully next week we will get the direction, because it will be a lot of important data released. Next week we will get the personal consumption expenditures. In the United States we will get European Union inflation, some statistics in Japan as well. So chances are not bad that we still will get some breakouts or some clear signs of the possible bullish action. So just need to wait a bit and see what will happen.